Great. And good afternoon, good morning, good evening, depending on where you sit in the world. My name is Michael Filighera, and I am the chief cook and bottle washer, so to speak, over at logicalsignals.com and tradershelpingtraders.com. And I, let's see, what about me? I am an ex-options market maker. I have traded options for many years. I started in 1979 here I live in San Francisco, so I started on the Pacific Exchange here in San Francisco. I've also traded options on the London traded options market, the European Options Exchange in Amsterdam, and on the DTB, which is the German exchange. And that was my first introduction to an all electronic exchange and wonderful experience, strange, but wonderful. And I came back, I lived in Europe and I came back to the United States in 1997, returned to the Pacific Exchange and continued to be on the options floor again. And then in about 2001, everything started to go electronic. And so there was no use to be standing on a floor because the business wasn't coming to the floor. And so I left and I set up an office in my home. And it was about 2013 that I decided that I was not adjusting well to being able to trade the volatility from sitting in front of screens flashing at me versus being on a trading floor. So I decided to make a switch and I went to trading the futures. And I started with the S&P and the NASDAQ. And I became a day trader. And it took a while to make the switch. It took a while to get adapted to how you want to trade, to build up the strategies, and to just continue to use my Elliott wave and the Fibonacci. And then also recently, I've had to add a great deal more data as the canvas, I guess, the trading canvas, I could say, has traded very dramatically. And by that I mean is like we've had seen or we are seeing where options is always considered the derivative of the underlying have suddenly become the underlying with the stock itself or the index becoming the derivative. Now that's a strange way to put it, but the introduction of zero DTE options, the introduction of expirations daily for zero DTE, and then weekly, and then of course we have the quarterly. So we always seems that we're just working from one expiration to the next expiration. And so what becomes more important in how we trade or what we trade are what is called the options flows. How money is flowing from one to the other, how and for what reason, and what does premium play in that equation? How does volatility now come into that equation? Because the whole setup for volatility has changed from what those of us that have been in the markets long enough that we really begin to understand. And in fact, it's like we always used the volatility or the VIX as the fear gauge, right? Higher volatility, the traders are feeling the market is going to go down. And so they use that as fear. And then low volatility was being booked as, well, that the market's complacent. They're really ignoring everything and they're just kind of, okay, we're just going to go up, 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 and up. Well, that actually has changed, where we've seen volatility, even during a down market, go down as well. So there's a different function of what volatility is, and it has become an instrument to hedge. It becomes an instrument to trade because we have the VIX index, which is not tradable. It's just a straight index. But then we have the VIX future, and then we have the VIX dailies, and then we have the VIX on the NASDAQ and the VIX on the Russell. And then we have all the sub futures that are 9-day, volatility or 2-day volatility, all kinds of derivatives of the derivative. So with this expansion in what we can trade and how we trade, I have started to add options flows, gamma, We see gamma runs where they just kind of drop, a whole index or a stock. And a lot of it will depend on, where do massive amounts of calls sit or massive amounts of puts sit. And then we start to develop what is commonly now known as a call wall or a put wall. Those have always kind of been around, but now they have much greater meaning. And for example, as we take a look at the S&P here, and we look at the SPX, that's the one where really you will see the put wall. And what I'll do is you can see right now that the SPX is down and heading towards 5,000. Now, if you follow anything that I say, 5,000 is major, major underlying capitalized letters support for the S&P 500. And let me show you why. Now we can look at the 19th of April and we look at the morning. We look at the morning options, the ones that expire in the morning. And here we have it there. Look at that line. This is the April 19th. So the expiration on Friday. The strike is the 5,000 level strike in the SPX. And we look over at the puts. 90,829 is the open interest. This has been 90,000 for quite some time. So, or not 90,000, but it's been a higher number, let me just say, because we were adding, almost 6,700 here today. And you can see that it pretty much is trading with some premium, obviously. But the worry is it's like if it goes down and breaks 5,000, it's kind of like, if we have this image in our heads about the little Dutch boy, right, who puts his finger in the dike, or they put their finger in the dike, and it stops the water. Well, you would think that something that this put wall would be able to be like that hand or the finger or that block, which would stop the market from dropping further. So it forms a level of support. And the size of it really puts it in, it's a major level of support because a break through it opens, just imagine the dam breaking. And what happens? That wall of water just takes anything that's in its way. And if this were to break, first of all, those puts would suddenly be in the money. And so all that premium, you'll see a lot of premium start to shrink because it's like, or maybe. But in any case, it opens up a lot of hedging, a lot of hedging. So that's just where I'm going to start about that, because basically what today is all about is, great, thank you, Jeff, is you guys ask me, you give me a stock and index. Yes, Friday is options expiration as well. You're absolutely correct. So these are the options that are expiring on Friday. But we can go out. You can see how they might move that put wall. But right now, it's sitting right at 5,000 there. But you're right. Okay, so I'm going to put that over there so I can see it as they come in. And the first ask is in Netflix. So let's go over and take a look at Netflix, which reports tomorrow. So let me just move this up to a daily chart. And so we can kind of look at, this mirrors basically the whole rally in the NASDAQ. And I can go up one more so I can get this whole rally. So this Netflix actually bottomed in May of 2022, while the market bottomed in October. So it had a little bit of head start on its rally. So it bottomed in May of 2022, and this 2, 3, 4, 5, A, B, C. It actually could have been an ABC down, and this is off of the high, so its all-time high is 702.63 or 799. Is its all-time high. And so I imagine a lot of the question out there right now is, where will it go on earnings and what will those earnings reveal. So let's just take a look at where the market is right now. Yeah, yeah, I would agree with you, Jeff. Jeff is commenting saying it still seems a little bit overbought for Netflix, and it is. And I'm out on the weekly chart. I'm on the weekly. Doesn't mean it can't go up, but it might be very quick and then come back down. And that honestly fits a lot of things within the market. But we'll see. We'll see how this all goes. Now, if I were to look at this on an Elliott wave basis, and I'm going to count this as a low, and even if it's going to be, say, for an A wave, and this is all a B wave, which I don't think it is because it's very much coming up in a more impulse type move. 1, 2, 1, 2, 3, 4. 1, 2, 3, 4, 5. That would be like wave one. This, yeah, it's going to be very hard because you see it's kind of herky-jerky here. But they're 5. So I can see that this 1, 2, 3, 4, 5. This could be 1. This is 2. 1, 2, 3, 4. 1, 2, 3, 4, 5, 3. Maybe comes down, but I think it goes back up again. And if I had to stick fibs on this, I would do this. And we're going to just do, let's just say that it doesn't get above what this high is 639 and this high is 630. I got to take it off of this one. Okay. So we go to that 639 high and say that the market pulls back. Then we'd be looking for something to drop it back down to 526, maybe 491 or 526 to 500, we say. And that would be just an internal, right? Because if here I have wave 1, wave 2, 1, 2, 3, 4, 5, wave 1 of 3, wave 2 of 3, wave 3 of 3, we're just doing a small fourth wave, and it really should hold the 382 level. So you're looking at 526, 527, 525. And then, but it can go here. What it can't do is it can't cross there. If it breaks below 584, it's a whole different picture for Netflix. But and if it breaks that high is 485. So if it breaks 485, not a good look for Netflix, at least on a weekly chart. Now, so I'd be looking for something. If they like the earnings, then you've got this high. And what it really would do, yeah, oh my God, I need to go out. Yeah, be cautious. Yeah, yeah, you're right. Doesn't mean that if they come out and like blow the doors like they have, and that the fact is like it started like they started buying it yesterday, and they continued to buy it this morning, and now they're finally getting caught up in that they're basically just selling the market. So it has to participate because they're just baskets of stock of which Netflix participates. So, but if I had to, I think it maybe just corrects a little bit, and then we go up again. So correct the weekly overbought. Let me just see if I take this down. Let's look at the daily. Yeah, the daily is actually not overbought. So on a daily basis, we could do a zip. We could zip back up. Right? Look at all this little sideways action. This is all stuck because of earnings. So even on a daily basis, you got support at the 50, which is 596. You got fib support at 570, 569, 570. And then we got that gap. So anything not really pleasing, you would look for they're likely going to come back and try to fill that gap. Yeah, so it has. But it might come in and fill that. And then that takes us down to that 50 level, which we know we don't really want it to go below because of that other level on the weekly, which is right there. So I don't really want it down. I wouldn't want it down there. And you got the 200 that comes in at 499. Yeah. I actually would think that Netflix is pretty popular. So again, and I don't think that they're going to report anything bad. At least we've not heard any of that type of rumors. So maybe a little bit of a pullback, and then they rally again. As long as they start relieving things, and you could run different fibs which are going to continue to show you upside. So in other words, it's like once I can get like this is 1, 2, 3, and we get that 4 in, then I'm going to connect from this low actually to this high and then run it over to the bottom of wherever wave 4 comes in or wherever that low comes in. And that's going to tell you what the next move should look like. Right now, it'd be conjecture. It would just be like a guess. So, yeah, I think there you go. That could be true. He's also commenting, he's saying some stocks like Amazon and Meta have surprises pre-planned. That might be. That might be. Okay, the next one up is the world's most popular stock at the moment, NVIDIA. They're telling me that NVIDIA, along with the rest of the AI, have caught a downwind because of this stock, which just tanked after reporting its earnings, gapped and continues to just drop. So, yeah, we'll see. We'll see how much. NVIDIA, though, hasn't even announced when they're reporting. So, and normally they're late in the whole cycle, so I would expect them sometime in May to give us our report. And so it continues to just get caught up in the day-to-day. But here's what I've marked for a pullback. And I did this off of, if this is 1, 2, and this is the 3, and then we have an A, B, and we're actually putting that C wave in now, right? And let me just take this off the daily, bring it down to the hourly. Okay, there it was. A, B, C, B, 1, 2. Yeah. Boys, this really gets ugly. But I've got some numbers already in here. And it's kind of hovering around the 0.618, which was support along with a fib, the 0.236 fib. That's all it kind of passed through. It came back and grabbed it again and is now kind of hugging right there. If it breaks, which it looks like it probably will, it should drop down to 828.40-ish or 828-ish, and then a severe slide, and that would be the whole market is giving up the ghost. Okay, so in other words, the NASDAQ stops any rallying, which is doing right now because the Dow's coming back big time. So I think maybe our lows are in for right now, to be honest with you. And it would have been a great opportunity if you're a futures trader to start picking up futures around 17,635, 640 in the NASDAQ. And the S&P, you were a buyer you're still hanging on. You're still kind of waiting for a stronger buy signal. But we kind of got one a little bit below all this. So we shall see. And put wall saved, by the way, right? So that you see how quickly they pulled up away from that put wall. Put wall was at 5,000. When we were over there just looking at it, the index was at 513. It's now trading 530. So all those sellers are done. Everything in terms of gamma flow and all of that, everything has been monetized. So all the puts that they needed to get monetized, they got monetized. If they needed to take in short calls, they did it. So these are the big players, and this is what they do in the options. We get these moves lower, and they just go and they go and they go and they go and they go, and you're like, what are they doing? I don't read any news. Why is this so serious? Check out the options flows. Check out what really comes into play. Just like I told you at the beginning, it's that in the SPX, it was a put wall. They went down there to take a look at it to see, but it's like there's so much support right there that if you break that, you're going to open up an avalanche. And it would be an avalanche of selling. And is that what you guys really want? So I guess they don't because other buyers decided to step in. And right now on the NASDAQ, on my 2-minute chart, it's kind of looking pretty that they're actually building a little 5 waves up, which could change the rest of the day in terms of the market. Now, back to NVIDIA. If NVIDIA continues to hug and hold without kind of giving it up anymore, then I'm going to look for it to head back towards 887. Now, if it breaks above that level, then this is all done. And this was done here. And this is just kind of like, very difficult, but still, it does mimic the market. But the way that it's looking, you see, they're not really willing to push above 850 yet. So that leaves open the possibility of 828 to come into play. And if they decide that nope, we're not really, and we are going to go down and we are going to test that put wall, then you're looking here. And then 382, which is pretty normal. If I go back out, 382 is the normal retracement for a fourth wave. It would be an extended C wave down, but still not out of the ordinary. And that's 773, 774. All right, so let's go take a look at Apple, the retail's favorite stock, which has been taking it on the chin, I have to say. Now, I have marked Apple as completing a pretty strong, so this is a intermediate degree. Let me just double check. That's my daily. Let me go to my weekly. Yeah, so this actually, here is that's the pandemic low. So from March of 2020 is where we got all of this going. Now, what is a little bit nasty is this. It fits, it works, but I'm not real happy about it. I don't like the way it did it, but stocks can do strange things. So I may have to go 1, 2, and then this is minor 3, minor 4, and we're still doing this minor wave 5 up. And this is still going to be very strange. But I'm actually going to take that off. So let's just leave it at that. And that would have been a slight failure. A lot of it just presents a difficult picture, right? This barely made a new high. So yes, I could say this is a B and this is a C, and it's pulling into a low at 165, 164. We have gotten down to 167. And today we got down to 168. Or this week, 168. I figure we're on the weekly. So I think Apple, again, they're not really looking that Apple's going to start blowing the doors off of their earnings. Now they report in beginning of May. Yeah, May 2nd. So there's still plenty of time. This is, of course, a huge option stock. And so when we take a look at just the options that are due to expire on Friday, okay, let's just take a peek. So we've had a range basically from 165 to 180 between, the last expiration, monthly expiration, and now. And you can see that a lot of that built up around, first they were building up for 180, then they had to drop that to 177.5, and then 175. And as each weekly expiration knocked another strike out of the running, everything just started to kind of slow down and come into play. So if we had to determine right now, 67.5 on the downsides, you see where they're building up the puts. So again, in Apple, you could say there's a little bit of a put wall right there at 167.50, to 165, depending on how hard. And 165's got the larger open interest, and we'll see how much of this actually will shift over and what will overtake. So you see, you got that wall kind of like 167.5, 165. This is for Friday's expiration. So this is all before they ever even announce earnings. And then on the call side, we've got, pretty much 170, 172.5. So it's just tightened its range for Friday, really tightened its range. So if it goes up and starts breaking 172, 175, you're going to see a lot of adjusting having to go because the market's going up. And usually that'll be because there's this huge gamma flow coming in. And so if you're short those 175s and they suddenly go into the money, as you as the stock continues to go up, you just become shorter and shorter and shorter. So you've got to really kind of go in and adjust, adjust, and you got to buy a lot. So because you can see the open interest is pretty high right there. How much of that is going to be left, I don't know. Again, because the market has been sinking, a lot of that could be sellers just kind of getting out. But back at the chart, I think there's support at 165 in that area. A strong break drops it down to the 200, which is at 147, 148, with fib support then coming in at 145. Now, that would be more disastrous if Apple decided that their earnings were going to not be well received. And there would be a lot of things that they just haven't told us yet. So I think it could be more of a shock than anything else. Anything that's already out there suddenly just becomes secondary to maybe what would be included in that earnings report or in the conference call. Microsoft. Sure, Sasha, we can do that. No problem. You're welcome. Sasha is, just to kind of tell you, Sasha is asking for a stock. Sasha is my colleague, my cohort in our trade room. And so we always like to come and listen to each other when we're out presenting. So yes, I'll be more than happy to do that for you. All right, so Microsoft. Microsoft has always been one of my favorite stocks in the world. And it continues to just be great. I'm going to start here on the weekly. But let me even go one further. Let's go out and look at a 20-year. Look at this move. Look at these moves. This is the great financial collapse, right? Where Microsoft dropped from when it started. Microsoft is sitting up at, there's been so many splits. I can't really tell you. I don't remember, but I know it was above $30 to $31. So, but let's just say it dropped 50%. Whatever it was 50% drop. And that was in the great collapse, the great financial collapse. And then we dropped into a low interest rate. Well, guess who took advantage of that massively? Of course, Apple, Microsoft, a lot of the tech, they had to build and get product and do all kinds of things. Well, that was very successful, we all know. And the stock just exploded. And they came out with new products, et cetera, et cetera. But now, starting really from here, what has become the most popular thing since October of 2022, when that massive low was declared by JP Morgan, Goldman Sachs, all these people. And so what did we get? We got an explosion and a move higher. And it was based on that call, number one, but also then we started the narrative on, well, interest rates are going to start coming down now. Okay, we are all done raising interest rates. They're going to all start to come down. That fueled. And you now see what's fueling it now, because now they're softening on that stance about interest rates. So what really is going on now? AI. AI is everything right now. Now, you could take this two ways. I think AI is not going anywhere. But I think that we better start listening to the warnings coming from a lot of people that AI will start to replace human beings in the workforce. And we're already seeing that. Artificial intelligence doesn't need a lunch break, doesn't need a rest break, doesn't get paid benefits, and you don't have to pay it a salary. Think about that. And when it's really going to be employed over a wide range of all of the sectors and what jobs it will take and what happens then. So in any case, all of this play to the upside is based on how Microsoft will benefit from artificial intelligence. Now they're incorporating it in different products. They're incorporating it within their corporate structure. And it remains a strong company that just consistently makes money. That's the important thing. So they have their different divisions. It's sort of like Amazon. Everybody used to think, well, Amazon makes money because look at all the books they sell. Look at all the sales that they get at Amazon. Everybody buys from Amazon. It's like, folks, you need to take a deeper look inside of Amazon to see that Amazon Web Service, AWS, that's their number one moneymaker. They rent out that space. They rent out that to everybody in the globe. And it's Amazon Web Services that makes the larger amount of money than everything we all buy from Amazon and get delivered in 2 days. Because if they were making a ton of money there, A, they wouldn't be raising Prime membership. A, they wouldn't start putting commercials on Prime, right? There was always commercial free. Now suddenly there's commercials because they're not making enough money. All right. Microsoft. I think if I'm looking at this weekly, and I'm going to start to bring it down so I can just see from the 22nd, from 2022 low, and that's going to be way down there. There's that 2022 low. The Microsoft chart, how did you set up to see this chart? Would you just let me know if this is what I've done? My moving averages, I have this is the 200 period, the magenta. The sort of goldish brown one is the 50. These are EMAs, by the way, EMA. So, and then I have a 20. That's that blue. And then I have a 13. I used to have a 5 and an 8 or 4 and an 8 on all my charts, but I combined them and it's the 13, but a little bit more effective. And at least on my longer term charts, like the daily, the weeklies, even my 4-hour chart, it becomes more effective than trading with a 4 or a 5 period and then an 8 period. Now those remain important. Say, for example, if you're trading off of a 1 minute or a 2 minute or even a 5 minute chart, then those become more interesting to track and to take trades off of. Excuse me. But on my long-term charts, I use 13, 20, 50, and the 200, all EMAs. Now, SMAs, I have added periodically because there are a lot of hedge funds and money managers that actually, or just the larger trading firms that use it, that use the simple moving average, but they'll use the simple 200, the 50, and the 100. Those are pretty popular on a little bit of the longer term charts for using simple moving averages. So here in Microsoft, I think that we see, again, same deal. We got a little pullback coming in. Let's take it down to the hourly chart. Yeah, there was the high. There was the A. This is a strange B. Oh, this looks just like the NASDAQ. So if I had to count from here, check this out. 1, 2, 3, 4, 5. Yeah, this is pretty wild. So, and if I had to, I would go like this. Yep, I can go like that. And if I go there, I get the move for the 3. But if I go from there and I go over to here, I get my downside move. Okay, so it came down to, what was that low? 410. The 100% marker, where this leg would have been equal to this leg, which is most common, that marker was 409.28. It came down to 410.33. As they say, close enough for government work, because look what it's doing, putting in a beautiful bounce up off of it. So if anything, this correction may be over. That started here. What does it tell me? Well, eventually it should go up and go above 432, which is that high right there. 431.61 to be exact. I've been looking for it to go above. And you just kind of go out and you start looking at your 4-hour chart. And that all started here. Yeah, we know it's got a lot. It's got a lot. And I would think that, wow, I'm not even sure. I'd have to move it out and just really start to piece it together to where am I going to get my upsides. Let me go back out to my weekly. It's just, yeah, this is how far you got to go sometimes. Yeah, see, this has just been one great, big, beautiful move. Let me go out here. And one more. Yeah, this is interesting because this is where it all started. And it's just, this actually hasn't done a gigantic correction yet. So if you had to count this thing, you really can kind of just say one, two, three, wherever this tops out, maybe has one more leg up. And then we're going to have a massive correction, not just a Microsoft. You have to think it's going to be a massive correction for quite a few things, including the global economies. So, but we still, I think, have one more leg up. If I'm looking at this, one more leg up. One, two, three, four, one, two, three, four, five. Maybe this is just wave one. Maybe it is everything. I don't think so. I think it still has more. Um, okay, so let me get back over there to just, I got to get to AI. Okay, we're now going to go look at this PHUN. PHU, oops, N. This one's for Sasha. Well, that's all we got. Sasha, this is a newbie, I would say, right? Yeah. So when we take a look at our we have it, this all started in 2018. And so it came in, and first thing it did is hit a high. And then it came down to this low, and then it went up to this high, and now we're back down. I think it's done a nice little ABC down on an expanded, here an expanded flat, or just an, not sure I see the whole correction. Okay. Yeah. Sasha and I are going to be talking later. I like it. He'll show me later. Okay. But I would agree with you that it's a correction and it's getting ready to finish up. And the next move is to the moon, to the moon. Now, mind you, I don't think PUN software was trading at $26,000. So some other stuff has happened in here in terms of splits and reverse splits because it's trading at $6 or $3 or whatever it is now. So, um, yeah, I would love to. Let's talk about it. That's a good one. Um, okay, let's go. Okay, so let me go back to where we started. Okay, Crocs is our next one. And again, on a monthly chart, there is the great financial collapse of Crocs Inc. And then, oh, there's the pandemic. It took it on the nose during the pandemic, too. Okay, this is kind of bizarre. Because I have to say A, B, 1, 2, 3, 4. Wow, Crocs should go up. If I'm right. So it's strange. This is strange against this, as the markets came down a lot further. Crocs didn't. If I'm taking it all from their start, right? So they came on board in March or February of 2006. And then we had that run up, and then we had the collapse. So if we even just say 1, 2, A, B, or finishing A, A, B, C, B, 1, 2, and then it comes back down. So this, without really putting any labeling on what all of this is, and I was just looking at this, it could actually be reflective, and that's the A wave, A, B, uh, A, B. We get a little bit of a finishing rally that might come up and equal or try to take it to a new high above 179. But I'm going to say that this is a market that I got to go out a little bit more than that. Here's that high. 1, 2, 3, 3, 4, 5. So that is 5 down. And then I'm doing 3 up. A, B, 1, 2, 1, 2, 3, 4, but it's come down and already overlapped that. Yeah, it's making some very strange moves, is almost as if to say that that's done. So, and that's it's done there. So this is done, and now we come back down likely to there. And that's a quick look. That's not really going in and looking at all the detail. That's just a quick look. That if I had to say that from that high, looks like it's an A, a B, and we're coming down. And the reason I say that is because if it still was just a tiny 4, it shouldn't be overlapping this. And you can see it already did by quite a bit. So that breaks any, initially it would break the necessity that you'd get one more rise up, maybe toward this high or a little bit higher. So that's like you go to your next one, which is down. Now that it's broken on the daily 50, it turns a little bit more negative and it's likely heading towards the daily 200. In fact, we're seeing a little bit of, well, not horribly, but it should accelerate a little bit. And it did. It gapped and now just kind of still filling in there. Yeah, I would think we got a little bit more downside there. Google back in favor everywhere. Yeah, amazing. Now, here's one that I think actually could blow the doors off in earnings. I actually think they could blow the doors off. So it could be, and I have I have a comment to make, and I'll do that when I'm done with Google. All right, Google, again, here we are. This is 2022, so that's the low in the market as well. Market bottomed in October of 2022, and that was a primary wave A. I'm under my count. Other people may have something different, right? So we had this big high, this beautiful high, and then we had all this rigmarole and ABC, X, ABC. So if Google's going to follow the same thing, and I'm going to put a primary, this is the pandemic. Then we got a bunch more free money, of course Google did well, and then it's going to be 1, 2, 3, 4, 5, 3, 4, 5. Yeah, I would say that it's actually mirroring in terms of the count the S&P. I mean, excuse me, the Nasdaq, except it kind of came down, which I'd have to say was a 4, and it's doing the 5. So if anything, this was wave 3, this is wave 4, and it's now putting in wave 5, which will complete a big run that started there. So how, and this is done in a couple of splits too, right? So, wow, see, this is the same deal that I got in the NASDAQ. This is a 3. This is interesting. So it's an irregular B wave, just like in the NASDAQ. And I'll tell you why. Because this is not five. This is this is an A, B, C. It's a three, followed by not sure because I'm on a weekly chart, but the weekly chart's not showing that this is even a 535 or yeah. And that we really, because this is what an impulse looks like. See, we get one, two, one, two, three, four, five, three, four, five, and then a deeper correction as maybe a one, two, and then a one, two, three, and that four is too deep. So even it starts to get a little clunky up here. But obviously they're holding it up because Google has got a surprise, so they say, in earnings. So what could we kind of look for? This one no longer applies. Let me get rid of that. If we're just doing fibs, yeah, I'm going to take it from this guy, and I'm going to put it down there. So what we're measuring is this leg against this leg. It's already past 618. So the most popular is always going to be equality. So that this will equal this, and that's at 183. Since it's already past 145, your next goal is going to be up there. On my next one that I could put in, I'd do the same thing. We got in between, it's already surpassed that. I have 163.51, and then here we have a double. And I love it when I get a match from two different angles coming in at the exact same level, by the way, 183.86. That's where this leg would be equal to this leg, and this leg would be equal to this leg. So you got two matchups there. Got a higher probability that that's likely where that stock is headed. Against everything else that's coming on. Wow, that could be very interesting. But Google's has picked up a lot of support, and again, AI work that they're doing, and they've got something else going on now. I can't remember what it is. I apologize on that. I get so much news on so many different things that sometimes my brain doesn't correlate it properly. All right, so somebody's asking, I've noticed whenever I sell options and they go deep in the money, I'm far more likely to be exercised on my short puts rather than short calls. Anyone know why? Um, Actually, both do the same thing. Your short puts, obviously they had to have been. If they go deep in the money, your puts should also be deep out of the money. I don't understand why somebody would short a put that didn't have value. So if your puts have value, somebody is gonna exercise their right to sell you that underlying at that put level. And that obviously was making money rather than the deep in the call. It should have been automatic exercise. So if you're saying on expiration that it goes deep in the money and that your formula could be exercised on my short puts rather than my short calls. If they're so deep in the money, a lot of times they'll just trade them like stock. So maybe somebody, right, prior to expiration, it's if your puts are in the money, that's why they're getting exercise. So, and that could be someone who actually bought the put with, and then maybe they have the straddle on. And so they're calling the put. All right, so ABNB is our next candidate. Good old Airbnb. VIX, it actually already expired, Jeff. It expires in the morning on the open. So that's already done. But yes, it was important, and it did matter. So yeah, good observation, and it did matter. It did have a little bit of play this morning. Um, and what we're talking about is the VIX. Yes, it does. The VIX, the VIX, but then there's the VIX actually has no options that are on the VX. Which is the futures. And so that's what expires. They have options and they expire early in the morning, pretty much on the opening. And then that releases a whole bunch of stuff. So everything starts to get reset for the next expiration, which is next Wednesday, by the way. All right, back at Airbnb, this actually, one, two, 1, 2, 3, 4. Yeah, it actually has a little bit more upside, I would think. This is all weird, 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 weird. But even if I just ran just fibs here down to here, you can see it's just actually come up to the 618. And all I'm looking for is what retracement can be created off of that decline for the rally back up. Well, it's kind of reached 618 and it's starting to turn over. That could be that this turns into an ABC. So if it turns into an ABC, then it's just corrective and we got another down leg to do. So we could say that this is 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Not the prettiest, but it does work. What is in response to 5 waves in any direction? An ABC corrective structure. So, and that could actually be right in here. Not the prettiest, but it could fit. And maybe we get one more new little high above there. That's at A, B, 1, 2, 3, a little 4. We get a 5. Maybe it runs up to there, maybe not. And then it could be done. And then we die. We come back down hard because we do the second. So this would be an A, B, and you still got a C wave down. This actually correlates very nicely with what I think is going to happen in the NASDAQ, but depends on who you're asking. But anyway, I am looking for maybe some additional upside to come. Beautiful, beautiful. I'll tell you what, you knew if I come on to do a webinar that the market that I trade is going to bottom and start to do the rally, which I've been looking for. So that was actually good time to get long. Would have been anywhere around 17,620 in the NASDAQ, 17,640 is now it's trading 17,730. So beautiful trades. And yeah, that's what we kind of do. All right. So let me kind of say on that one, yeah, just kind of watch to see if it doesn't turn and go back up, put in a new high above there. I had to say, yeah, there's too many different connections that I can make to get it to where it could go. The bottom one I could take is right to there. That would be pretty big. There you got 177, because the first one up is 100%. That's 191. That's where this final leg would be equal to that leg. So it's 1 versus 5. And if this is a C wave, or even, yeah, I don't know, 3, 4, I know, yeah, it's 1 to 5. So it's the 5th wave. And no, sorry, that's wrong. Give me 1 second. I got to take it from here. Inside. It's inside this sucker. Now let's go look. Okay, so there you go. So if it starts to rally back, first layer is 168.35, but you wanted to look at to get above that level. So you look at it 100%, which is 177-ish. Great. Thank you, Jeff. Thank you. I'm glad you do. All right, so I have MNMD, and I'm going to be watching this clock. Mind medicine. If I had to tell you, you see that? First leg down. It's an A or a 1. but I wouldn't say an A because of how low we are. A, B, C, B. Now, if you had to put something together to say, where can this go? It's going to tell you it's going to go to 0. See? Which for it to stay alive, it can't. Um, but you can put one other one on here. No. Let me try something else. If we're going to come down off of that, not very much. Yeah, it's a little bit tough. I would think because of where it's trading, this looks like it will come back down. So whatever this is based on, they're probably not getting a lot of success, and they're probably looking for somebody to buy them. So I would think they come down. Your first line of defense for support is $7.95. The second is $7, and your last one is $5.72. If it breaks there, then you better look for this. It's going to start going back down to the 2s before it's done. All right. This will be my last one, so I'll do USO because I have something I want to talk about real quick. The oil fund. Boy, this is tough because you're welcome. There's so many things that are going on with crude oil. And if the big suspicion is Israel going to go really disrupt the flow of oil, et cetera, et cetera. So there's that if out there. And and that's why we're still just holding higher and we don't see crude oil selling off at low. If all of that blows by and nothing happens, I would think that this is going to react and that oil prices will start to come down. Maybe. And therefore, this would just kind of be an ABC and will come down in 5 and then maybe rally again. So if we don't get up and break that high at 92, then this is leg 1. So this would be an A, B, C, A, B, C, and this would be maybe 2, and then we should come back down. And if you're looking and you want to measure it, that's to take it that I'm just going to put a guesstimate on that high. You're just going to run some fibs from there to there, and you're going to run it up to that high. And if it goes higher, then you kind of go from there. So you can see that 100% is 48.88. It'd be a sweet drop, I'll tell you that. Could be right there. Now, I want to give myself enough time again, Michael Filighera, and I am logicalsignals.com and also tradershelpingtraders.com. One thing that I do together with my colleague, my cohort, who was here with us today, is Sasha Goring. And Sasha comes in and we do the trade room together. And I mean, our trade room, our basic market that we're trading right now is the NASDAQ 100. But I want to be adding the S&P as well. So we provide analysis. And those of you that watch me on YouTube, you see that my analysis is every day. Monday through Thursday, and then I go back in and I do a podcast on the weekend, and I restart on Monday with Elliott Wave updates. So in lieu of that, we have a trade room, and in the trade room, we are day traders. But what we're working with, of course, is a much shorter term time frame chart, and we're giving you our levels, our do not break levels. Or if we break, we're going to look for different levels. And so we are trading the NASDAQ, and I want to add the S&P, but we trade the futures day trading only. And so we're opening up the room for new members, and the price of that is $2.99 a month. And my goal is to earn $300 a day with showing my trades. And the goal is $300 a day. And quite frankly, most of the time I exceed that. And I'm not going to say I'm perfect because I'm definitely not. And have I ever taken a hit? I sure do. But the goal is to at least make the price of the trade room every day. So if you have an interest, you can check us out at www.logicalsignals TimingResearch.com, and that'll take you right to where you would be able to join and pay. Or you can go to logicalsignals.com or tradershelpingtraders.com, and you go to the trade room tab, and it's the same deal. And we meet every day. Yes. And we trade every day. We open at 6 a.m. Pacific daylight, and then we trade until 8 a.m. Pacific daylight. And right now we have a very eclectic group, and we have people from Europe and here in the United States. And actually, we also have one member who comes all the way in from Thailand. So great group of people. And we'd like to welcome anybody else who might have an interest. That's going to be it for me today. Thank you so much, because the last time I did this, we didn't get any requests. So pleased to have all of these requests, and glad that I could at least put something together on each one of those. And David, back to you.